Hi friends, this is our first video in the series Financial Reporting. We'll start from Ind-AS, Indian Accounting Standards, which are basically GAAPs, Generally Accepted Accounting Principles. So the first question arises that what is GAAP? GAAPs are those principles, those fundamentals on the basis of which any particular transaction is decided to be treated with in a particular manner. For example, if we are entering into an amalgamation, say our company ABC Limited is going to buy another company XYZ Limited, what GAAPs will do, they will tell us how that transaction of amalgamation, that transaction of marriage between two companies shall be recorded in the books of account of ABC Limited, which is acquiring XYZ Limited. So this is the basic purpose of GAAPs, Generally Accepted Accounting Principles. Those are laid down principles, laid down framework, which guide us through the accounting treatment of different transactions, events, and in different scenarios. So first of all, I would give you a overview of all the Indian accounting standards which are there. This series is also important from the point of view of the chartered accountancy students who are into CA final. Let's discuss the syllabus in terms of Ind-AS, Indian Accounting Standards. There is module 1, which consists of 5 chapters. First chapter is on Introduction to Indian Accounting Standards. Second chapter talks about conceptual framework for financial reporting under Indian Accounting Standards. Third chapter consists of 3 Indian Accounting Standards, which has a heading of Ind-AS on presentation of items in the financial statements. So the Ind-AS covered here will be on presentation of items in the financial statements. Ind-AS 1 is presentation of financial statements. Ind-AS 34 is interim financial reporting. Ind-AS 7 is cash flows, statement of cash flows. Then there is chapter 4, which is on Ind-AS on measurement based on accounting policies. So obviously, the accounting standards or Indian accounting standards under this chapter will deal with measurement, which will be based on accounting policies. So the first Ind-AS covered here is Ind-AS 8, which talks about accounting policies, changes in accounting estimates, and errors. Second is Ind-AS 10, which covers events after the reporting period. Reporting period basically is an accounting period. Say 23 and 24, financial year 23-24 is an accounting period. So this Ind-AS will be covering events after the reporting period, that is to say occurring after 31st of March 2024. Ind-AS 113 covers fair value measurement. In this Ind-AS, we will learn how to calculate the fair values in different scenarios. Then there is chapter 5, which covers Ind-AS 115. Ind-AS 115 is on revenue from contracts with customers. Then there will be annexure, which is on division 2 of the schedule 3 to the Companies Act 2013. There are many schedules in Companies Act 2013. Among them, one is schedule 3, which talks about how to prepare the financial statements in the context of companies in India. There are 2 divisions, Division 1 and Division 2, with regard to the preparation of financial statements having to do with the application of accounting standards. Division 1 covers those entities which apply accounting standards on their books, and Division 2 deals with the preparation of the financial statements of those entities which apply Ind-AS, Indian Accounting Standards, on their books. So when we are studying Indian Accounting Standards, our focus will be on Division 2 only of the Schedule 3 so far as preparation of financial statements are concerned. The formats of the financial statements shall be taken from Division 2 to the Schedule 3 of the Companies Act 2013. Why? Because we are applying Ind-AS. So Ind-AS compliant entities are required to follow Division 2. Wait a second. So friends, we were discussing what was Division 2. Division 2 applies on the financial statements which are Ind-AS compliant. Now let's move to Module 2. Let's move to Module 2 of our syllabus. It consists of Chapter 6, Chapter 7, as I showed. Chapter 6 consists of Ind-AS on assets of the financial statements. So the contents of this chapter will deal with the assets in the financial statement, say inventories, say machinery, land, building. Let's discuss the Ind-AS under this chapter. First is Ind-AS 2, and Ind-AS 2 is on inventories. What are inventories? For a trader, inventories are finished goods. For a manufacturer, inventories are categorized as 1. Raw material, 2. Work in progress, that is semi-finished goods, and 3. Finished goods. Then Ind-AS 16. Ind-AS 16 talks about property, plant and equipment. In short, we will be calling it PPE or PPNE. Third one is Ind-AS 23. It talks about borrowing costs. Basically, this Ind-AS tells us that what portion of the borrowing cost, that is basically the interest cost on loans and borrowings, is capitalized into the cost of, say, other assets, and what portion is directly debited to profit and loss. Next Ind-AS is Ind-AS 36. Ind-AS 36 is on impairment of assets. What is impairment? Impairment is decrease in value or fall in value. Don't confuse it with depreciation or amortization. This is a different topic altogether, which will be discussed in Ind-AS 36, impairment on assets. Next is Ind-AS 38, which talks about intangible assets. As there was Ind-AS 16 on property, plant and equipment, those were tangible assets in the business or on the face of the balance sheet. And Ind-AS 38 is on intangible assets, which are not physical, which cannot be touched and seen. Say a franchise, say a copyright, a trademark, a license. These are the examples of intangible assets. Next, we will study Ind-AS 40, which is on investment property. To give you a brief idea about investment property, firstly, obviously, it won't fall under the ambit of Ind-AS 16, property, plant and equipment, nor it will fall in intangible asset. Basically, it will cover land, but in detail we'll be studying it there only, which type of land are covered in investment property. Then the next one is Ind-AS 105. In Ind-AS 40, land and building, both will be discussed. Ind-AS 105 covers non-current assets held for sale and discontinued operations. So this Ind-AS covers two topics. First is non-current assets held for sale, and second is discontinued operations. Say our company is dealing or was dealing in mobile phones as well as laptops, and now we find that the business of mobile phones is not that lucrative to us, or it is causing or incurring us losses, so we might discontinue it. We might take a decision not to run this business any further. And if we are in the process of discontinuing this business, what shall be the treatment of the discontinuing operations in our books of account and financial statements shall be studied in this Ind-AS 105. So there are two components of Ind-AS 105. First is non-current assets held for sale, and second is discontinued operations. Next Ind-AS in this series is Ind-AS 116, a very important Ind-AS. It covers leases, because all the businesses or most of the businesses take assets on rent to fulfill their needs. That's why this Ind-AS 116 is quite important in this syllabus. So we'll be discussing the treatment of leases from the point of view of both one lessee and second lessor in terms of financial leases or operating leases. Next is Chapter 7. Chapter 7 covers other Indian accounting standards. That is, there is no particular heading or particular categorization for such accounting standards, Indian accounting standards covered here. First is Ind-AS 41. Ind-AS 41 is on agriculture. We will be studying about biological assets, the treatment of biological assets, say plants, say farming animals in this Ind-AS. The Unit 2 talks about Ind-AS 20, that is on accounting for government grants and disclosure of government assistance. In short, I'll be calling it government grants. So this Ind-AS, the Ind-AS 20 talks about government grants. I'm giving you a glimpse of the topics we'll be covering. This will help you create an image in your memory about the topics which are to be discussed. The next unit, Unit 3, is on Ind-AS 102. Again, a very important Ind-AS. All the big companies these days give ESOPs. You people must have heard about ESOPs, employee stock option plan. That is the major content of this Ind-AS, although share-based payment covers more topics than ESOPs, but basically the maximum coverage given by this Ind-AS is on ESOPs, employee stock option plans. In layman language, these are equity shares basically, which are given by companies to their employees to, say, motivate them to perform better or to retain them for a longer period of time. So this is also a very important Ind-AS, share-based payments. Big companies have a separate department for payrolls, and in that department there is a very good profile, job profile, which is specially on rewards, and that deals specially with ESOPs or SAR, stock option appreciation rights, sorry. Stock appreciation rights are SAR and ESOPs are stock option plans. Then we'll move to module 3. Again, there is chapter 8, 9, 10, 11. In module 3, chapter 8 is on Ind-AS on liabilities of the financial statements. Earlier we studied Ind-AS on assets, and now we'll be studying Ind-AS on liabilities of the financial statements. What could be the examples of liabilities on the face of a balance sheet? Say, employee benefits payable or provisions or income tax payable, etc. So chapter 8 is on liabilities of the financial statements. The first Ind-AS covered here is Ind-AS 19. Ind-AS 19 talks about employee benefits. Here we'll be studying about salary, treatment of retirement benefits, termination benefits, etc. We'll be studying about provident funds, pension schemes, gratuity, basically divided into short-term or long-term benefits. Then comes Ind-AS 37. Ind-AS 37 is also very important. Ind-AS, it covers provisions. You must have heard a lot about provisions while doing accounting. Must have made provisions for various things. A very common example of provisions is provision for outstanding expenses. Say expenses which have accrued but not yet due for payment, or which have accrued, became due but haven't been paid. Those are shown as payable. And which have accrued but not yet become due, they are shown as provisions. The other provisions also, say provision for doubtful debts, provision for bad debts, which are created against assets. Which assets? Debtors. So we'll be studying about provisions, contingent liabilities and contingent assets in Ind-AS 37. Then comes chapter 9. Chapter 9, the coverage of chapter 9 is Ind-AS on items impacting the financial statements. So we'll be studying about some items which impact financial statements. Here we'll be studying Ind-AS 12, a very important Ind-AS again. Ind-AS 12 is on income taxes. So to make you familiar with the topics about which this Ind-AS is all about is deferred taxes. You must have heard about deferred taxes. So Ind-AS 12 will deal with deferred taxes. Current taxes and deferred taxes, both. Unit 2, Ind-AS 21, the effects of changes in foreign exchange rates. That is to say, forex changes, foreign currency changes. Next is chapter 10. Chapter 10 covers Ind-AS on disclosures in the financial statements. So the Ind-AS we'll be studying here will be on disclosures. A very important part of financial reporting. Whenever we are preparing our financial statements and annual reports for the purpose of publishing them, especially in case of listed entities, the disclosure part becomes very, very relevant. Nevertheless, it's disclosures or their disclosures are important in case of unlisted entities also. The first Ind-AS here is Ind-AS 24 on related party disclosures. Second is Ind-AS 33, EPS, earning per share. EPS is disclosed on the face of profit and loss statement itself. Next is Ind-AS 108. It talks about operating segments. Then comes Chapter 11. Chapter 11 deals with accounting and reporting of financial instruments. I won't be boasting if I say this is the soul of financial reporting under the new regime of application of Indian accounting standards. From when the Indian authorities have decided, or Indian government has decided to converge with the international financial reporting standards, with the standards which are being followed in rest of the world, this topic of accounting and reporting of financial instruments is the soul of the entire change which has occurred since we have changed ourselves from the older accounting standard based reporting to the newer Ind-AS, Indian accounting standard based reporting. In these accounting standards, which are Ind-AS 32, 107 and 109, we'll be seeing very big changes, drastic changes from what we are used to doing in the older regime of accounting standards. So there is Unit 1, which covers the scope and definitions of the financial instruments. And there is Unit 2, which deals with classification and measurement of financial assets and financial liabilities. In the new regime of Indian accounting standards, we will be bifurcating our assets and liabilities into financial and non-financial. And all those assets and liabilities which are financial in nature will be dealt with as per the Indian accounting standards 32, 107 and 109. Save as otherwise the specific treatments given in other Indian accounting standards other than these three, 32, 107 and 109. So if you are curious about what is the basic difference between the older regime of accounting standards and this new regime of Indian accounting standards, or why we are studying new accounting standards, once you go through this financial instruments topic, you will come to know that there is a drastic change from the older regime to the new regime. Next topic which we will cover in financial instruments is equity and financial liabilities. Equity and financial liabilities. Please bear with me because I am highlighting the topics for your ease of understanding. Next is Unit 4, which talks about derivatives and embedded derivatives. You must heard of derivatives if you do trading, deal in stock market, or if you have studied financial management in CA or other professional courses. Next unit is about recognition and derecognition of financial instrument. Recognition is what? When we bring something in our books, it is called recognition, and when we dispose it off from our books, it is called derecognition. Say furniture debit to bank is recognition of furniture into business, and then bank account debit to furniture is derecognition of furniture from business. Elimination is derecognition. Next topic is about hedge accounting. When we are hedging something, it means we are covering our risk. So we'll be studying something about that. The last topic here is disclosures. Disclosures about the financial instruments in our books. Last but not least is Module 4. There is Chapter 12, 13, 14, 15, 16 and 17 in Module 4. Chapter 12 is on Ind-AS 103 business combinations. Business combinations talks about marriage, divorce of business entities. The example I gave you in the start of my video. What is business combination? Say one company is acquiring another company, it is a business combination. Like HDFC Bank has acquired the HDFC Loans company. This is covered or dealt with in Ind-AS 103 business combinations. Although, for your knowledge, banks in India are still not required to apply Ind-AS on their books. Chapter 13 talks about consolidated and separate financial statements of group entities. Consolidated financial statements are abbreviated as CFS. And separate financial statements are abbreviated as SFS. On CFS, we have a full accounting standards, Ind-AS 110. 103 also deals with the initial part of consolidated financial statement, or the first step of consolidated financial statement, and thereafter Ind-AS 110 comes into picture and deals with the consolidation thereafter every year. And there is Ind-AS 27, which deals with separate financial statements. In Unit 1, we will be studying Introduction to Consolidated and Separate Financial Statements. In Unit 2, we will be studying important definitions. Unit 3 covers consolidated financial statements. And what I told you earlier, Ind-AS 110 tells us the procedure for consolidation of subsidiaries. And this is the biggest portion in consolidation. What? Consolidation of subsidiaries. subsidiaries. Subsidiaries are those entities which are under the control of the parent. Those are called subsidiaries. So Ind-AS 110 deals with the procedure for consolidation of subsidiaries. Then there is Ind-AS 111. It deals with joint arrangements. For example, joint ventures. Then comes Ind-AS 28, which deals with investment in associates and joint ventures. So although joint venture is a joint arrangement, but joint venture per se, investment in joint venture per se is covered in Ind-AS 28. So Ind-AS 111 will explain what is a joint venture, but its treatment, the investment in joint venture treatment will be covered in Ind-AS 28. Now comes Ind-AS 27. So let me clarify. Basically, when one company makes investments, it may take the other entity into its control. If it takes another entity into its control, it is known as subsidiary, and the consolidation procedure of subsidiaries is covered in Ind-AS 110. And if it hasn't taken the other entity into its control, say it is an associate or a joint venture, that those are also investments. Subsidiaries are also investments of the parent, and associates and joint ventures are also investments by a company. Although in that case it is not identified as the parent of that company, but they are an investments for that company which sits on the investment sides of its balance sheet in separate financial statement. These are tackled, the associates part and the joint venture part, or investment in associate and joint venture part, is tackled in Ind-AS 28. Unit 8 deals with disclosures. Then comes chapter 14. Chapter 14 is on Ind-AS 101. Ind-AS 101 is on first time adoption of Indian accounting standards. So I can say that this is a transitional provision. This Ind-AS covers the transitional provisions. Say company ABC Limited was applying accounting standards, company accounting standards on its books and financial statements since last, say, 20 years, and now from 23 to 23-24, financial year 23-24, it is required to adopt the Ind-AS for the first time. So how the Ind-AS should be adopted, or what all things should be kept in mind while adopting the Indian accounting standards for the first time, or converting your books into a compliant set of books as per Indian accounting standards, is dealt with or dealt by Ind-AS 101. Give me a short break, please. So we were discussing Ind-AS 101, the first time adoption of Indian accounting standards. So I told you that this is a transition provision. When any company is first time converting its books from old regime to new regime, that is, it is first time complying to Indian accounting standards. So this Ind-AS tells what all provisions shall be applied when you are first time adopting the Indian accounting standards. Here I would like to tell you one more thing, that 101 series, the series in Indian accounting standards, which is in hundreds, 101, 102, 103, 104, is convergence from IFRS, or is adoption of IFRS in International Financial Reporting Standards. And the series which starts with 1, Ind-AS 1, Ind-AS 2, Ind-AS 3, Ind-AS 4, it is a convergence from IAS, or adoption of IAS, International Accounting Standards. So Ind-AS, you will be finding two series in Ind-AS. One is 100 series, Ind-AS 101, 102, 103, 104, and other is 1, 2, 3, 4 series, Ind-AS 1, Ind-AS 2, Ind-AS 3, Ind-AS 4, Ind-AS 38, Ind-AS 40, like this. So the 100 series is convergence from IFRS, and the normal series 1, 2, 3, 4 series is convergence from, or adoption of, IAS, International Accounting Standards. The next chapter in module 4 is chapter 15, which talks about analysis of financial statements. Analysis tells us the results of the efforts put in the business from its past. Say, what is its profitability position, what is its capital structure, what is its liquidity position, current assets or current liabilities position. So chapter 15 talks about analysis of financial statements. Then comes chapter 16. Although it is not important from the preparation of financial statements point of view, it is on professional and ethical duty of a chartered accountant. And chapter 17 again is not basically on Indian accounting standards or financial statements preparation. It talks about some technological developments and its association or relation with accounting. So this was the syllabus, or these were all the accounting standards which deal with big companies in India now. Big companies, to say, either they are listed on the stock exchanges of India, or they are having a huge, I would say, net worth of at least 250 crores. Indian accounting standards, although are not applicable yet on banking entities and insurance entities and NBFCs, non-banking financial institutions in India, they haven't yet been made applicable by the government on these institutions, other than those entities which are either listed or have a big net worth of at least 250 crores are required to apply Indian accounting standards. So we'll be starting from chapter 3, unit 1, which is Ind-AS 1, presentation of financial statements.